Hello ladies and gentlemen, good morning. With Monday's outlook for GDMFX, I'm Joseph Norwich, Senior Analyst. Starting with the US currency today, it weakened against the yen to 114 yen per dollar after reaching a 70-year high last week, as Bank of Japan Governor Kuruda said there was no limit to easing measures the bank could take to tackle deflation. Now, the dollar fell for a second day after U.S. October payrolls growth were weaker than economists forecasted, and traders reduced bets for an early Federal Reserve interest rate increase. National Australia Bank raised its quarterly forecast for the dollar against major currencies. The revision included a cut in its year-end target for the euro to 1.22 dollars per euro from 1.26 previously, of course, and an increase in the dollar projections against the Japanese currency to 123 yen from 117 yen at the end of 2015. Now, the disappointing non-farm payrolls data have given the market an opportunity, especially for a lot of investors in Asia, to take profits off the table from the dollar's strength. The Australian and New Zealand dollars strengthened after China's Statistics Bureau said November 8th the ratio surplus trade expanded to $45.4 billion in October. The Aussie right now is at 0.8668 versus the USD, and the Kiwi is at 0.78. European stocks advanced this morning after posting a weekly decline as investors wait the corporate results from companies. Futures were little changed this morning, and the shared currency is at 1.2473 versus the USD. In the commodity sector, briefly, for gold, the yellow metal fell from the highest level in a week to 1172 on expectations that U.S. borrowing costs will increase. Of course, and an asset in the largest exchange-traded product backed by the metal extended declines. But then halted 2 weeks of losses last week after posting a 3.2% advance on November 7. That was the biggest one-day advance since June. A point to note here. Prices rose even if as holdings in the largest SPDR gold trust shrank for a fourth day to the least since September 2008. U.S. employers, for information, added 214,000 workers in October, missing the 235,000 gain as a speculation. Also, the speculators are the least bullish on WTI crude in 20 months as they lost faith, of course, in the OPEC's willingness to ease a global supply glut. Money managers reducing net long positions in crude oil by 8% in the week ended November 4, a data from the U.S. Commodity Futures Trading Commission. Long positions retreated to the least since May 2013, while short holdings rose. Of course, in the U.S., what we saw, oil production climbed to 8.97 million barrels a day in the week ended October 31st. The most in the largest weekly data going back to 1983, according, of course, to the Energy Information Administration estimates. That's all for today. Nothing major in the calendar. Thanks for watching. Bye-bye.